Hello and welcome to Explain the Charts. Today is February 27th, 2025, and we're taking an in-depth look at EURUSD, analyzing both the news and the charts to help you make informed trading decisions. Recent news indicates the EURUSD pair is facing downward pressure, influenced by a strengthening US dollar and concerns over potential tariffs from the US. We're also seeing rising US Treasury yields, further supporting the dollar. Let's dive into the charts to see what they're telling us. First, let's take a look at the one-day chart to get a broader perspective of the price action. Okay, so on this daily chart, we can see a general downtrend over the last few months. The pair has been making lower highs and lower lows. Let's look for some key levels of support and resistance. We can see some resistance around 1.085 and 1.09, and some support is forming around the 1.035 and 1.02 levels. It appears that bears are currently in control. Now, let's narrow our focus to a shorter time frame and examine the 1-hour chart to identify more recent trends and potential entry points. On the 1-hour chart, we see that the pair has been consolidating for the past few days. A breakout from this consolidation could signal the next direction. The news suggests that tariffs and rising US yields are strengthening the dollar, so a downward break seems more likely. Let's focus on a smaller range of candles on the 1-hour chart. Focusing on candles between approximately February 7th and February 12th. We can see a period of consolidation here, forming a tight range. A break below 1.03 would confirm the downtrend. Now, let's zoom in even further with the 15-minute chart to pinpoint precise entry and exit points. Looking at the 15-minute chart, we can analyze the most recent price action and identify potential short-term trading opportunities. On this 15-minute chart, we can see short-term bounces happening. It's important to remember that short-term rallies are often sold into in downtrends, and that's what we're seeing so far. Given the news, we can expect that these rallies are likely to be short-lived and will likely be followed by the downtrend continuing. To recap, important price levels to keep an eye on are the resistance around 1.085 and 1.09, and support forming around 1.035 and 1.02. A break below 1.03 would likely lead to continued downside. Based on the current information, the likelihood of EURUSD reaching parity in 2025 is not out of the question. News mentions that some analysts believe that is likely to happen. However, any positive news for the Eurozone, such as Germany increasing fiscal spending, could temporarily support the euro. Keep an eye out for any policy changes or economic data releases from the ECB. That's all for today's analysis on Explain the Charts. Remember to do your own research and manage your risk accordingly before making any trading decisions. Good luck trading, and we'll see you next time.